Hello everyone, welcome to today's daily market review. Hope that you all having a great weekend. And I'm going to review last week action and trying to build a trading plan going forward. We cannot predict the future, but it's important to know the levels and try to manage the risk according what we are seeing. So after last week, big ugly action after hitting new all-time highs with new all-time highs on SPY, looking for the SPY 385.85, and we had a bearish reversal signal, and from there we had what I call the bear gap. What is a bear gap? It's a gap down that it's not filled. So on same day, in a bull case scenario, what we should see, we should have seen that bulls would be able to push price back above the 21 day moving average. We opened below the 8th day. Bulls should have gotten above the 21 day moving average and on next day filling the gap. What we saw on Thursday, we saw on Thursday that bulls try in the first half of the day after the market open tried to push and fill the gap, were not able to fill the gap, and at the middle of the session during the lunchtime, bears strike and push price back lower. On Friday, bears once again strike. On Thursday, I said that bears were on control to manage our risk. I raised the most cash I've been raising for a long time. I raised cash last week, and it was the wise thing to do. Bears in control, and they show up once again on Friday, keeping price below the 21 day moving average and fading until the end of the day. So they just closed above $370. That's your level going forward. So what we know that bears are in control. We hit the 50-day moving average, and we need to be open-minded what kind of correction we have right now. So we can have a big correction as we saw, and on September, on October, can be like this, or we can go way lower and we can go all the way to $360 area. So something to keep open-minded, because yes, we can, but we can also reverse back up. So as a trader, and especially when we trade for a living, we need to be open-minded for anything. Playing for upside and playing for downside. So going forward, what we know that bears are in control. We are below the 8 and 21 day moving average. So my bull case scenario, it's only above 377.6. That's the 8 day moving average. Above that, I'll be bullish. Otherwise, we should be looking to short the rips. And as support, we have $370 and we have 368.2. That's last week lows. Below that, what we know that we can follow apart all the way into $360 area. That can be the next biggest support if we break down. Looking for small caps, exactly the same thing. One of the things that I've been telling about small caps, that it was getting extended, and last week we had a bearish reversal candle, some indecision. We had another sell the open on Tuesday, and finally on Friday, after several attempts, they push price below 207. So what I'll be looking next week, one of the things, there is a lot of bearish imbalance. I've been saying that lots of bearish imbalance going into the next couple of sessions. So on IWM, on small caps, I will only be bullish if price goes above 211. Then I'll be bullish. Why? Because that will put price above Friday highs. It will trigger a big short squeeze for a move back into 217. That's the bull case scenario. But considering the action that we saw on Friday, possible day one on Friday, if we go below 204, watch out. I'm looking for a move into $200. We have a gap to fill at 197, and also the 50-day moving average at 196.79. So that can be on the cards, but we need to go below 204. So 204 will be the trigger for next week for possible breakdown on the small caps. Looking for the cubes, exactly the same thing. Bears were able to keep price below the bear gap, so we continue here to have a bear gap. And despite the bounce on Thursday, at the middle of the session after lunch, bears were able to strike, fade, and push price below the 8-day. So that's why I said watch out, bears in control, bears pushing price, fading, and pushing price below the 8-day moving average. And exactly what happened below the 8-day moving average. On Friday, bulls tried to push price once again above 320. They failed, and bears strike pushing price below the 21-day moving average. So one of the things that we need to pay attention is, first, we have a bear gap. That's the first signal. Second, we have a big close below 21-day moving average. On the last couple of pullbacks, the 21-day moving average has been holding, not this case. So what I'll be looking, first, bull case scenario for me, only above 320.72. Why? That will put price above the 8 and 21-day moving average. It will put price above the Friday highs, and from there it will trigger a big short squeeze. But considering the action that we saw on Friday, bulls needs a lot of power to push price above 320. But I need to be open-minded for that. Above 320.72, I'll probably be looking for a big short squeeze. Otherwise, below 312, what we have 309, $310 that can act as next big level to watch. So stay open-minded. Something that I will also be looking for, a possible bull reversal candle. Not sure when that will happen, but after such a pullback, either here or if we go even further, I'll be looking for a possible deep buying, start adding small portions for the long portfolio approach. Okay, so that's something that I'll be looking to put cash to work into the long term, not in the short term, but start adding for the long term as long as we continue to pull back. Looking for Apple. Actually, a bit disappointed here on Apple. I was looking on Thursday for a gap filling. They filled the gap. I was looking for some upside. Myself, I got some calls on Apple last week on Thursday. It didn't work. I get out. And they closed below the 8-day moving average. That was one of the first signals. On Friday, they tried to hold the 21-day moving average and they failed and closed below the 21-day moving average. So very, very bearish action here right now with one of the leaders fading. They rejected price above 140, push price below the 8-day moving average after earnings, and on Friday below the 21-day moving average. So what do we know going forward? 130 is the support. Below that we have 128, we have 126, 127, and from there I'll be looking for this area to be defended. It was a big support here, so 126, 127 for the long term is a big level, needs to hold. Otherwise, we can fall apart, and when I say I can fall apart, we can go into 120 or even lower into 115. So need to be open-minded for that. Bull case scenario, same thing, needs above 137, above 137. It will put price above the 821-day moving average and above Friday highs, and from there it will trigger a big short squeeze. Need to see it. Airbnb, one of the names, keep seeing bullish options activity. So going into next week, I'm being open-minded. We have 179.31. That's Friday lows of the day. If it pullbacks into the 21-day moving average, we have 171. So I'll be looking for some possible bullish reversal candle here, playing for a reversal back into $200. So staying open-minded for that. AMC, one of the names that is really getting pumped. I received lots of questions about AMC. I'm kind of scared about these stocks, especially after this big explosion. GameStop, another one. It's a very, very tricky game. So I don't dare to short this because they are already heavily short, but it's very tricky also to get long. So we had the stock going into $20 last week. If you are long after such a strong move, it's wise to trim the hell out of the profits. But if the stock pull back somehow and goes into $10, $12, we can have a reversal bounce and looking for another squeeze. Or if the stock goes above $16, that's Friday highs, above $16 can go back into the $20 area. So something to keep on watch. Not for my own risk management, I'm not looking to play this one. It's very tricky in my opinion. The options are way too much elevated. The volatility exploded, so be careful playing these ones. Okay, guys. Looking for Boeing. It's has been very weak. Below the 8 and 21 day moving average. Each bounce faded, has been fading. And on Friday, once again, 201, it was rejected. Price closed at the lows. So going into next week, if price goes below 191.85, I'll be looking. We have a gap to fill here at 187. So I'll be looking below 191 to fill the gap at 187. So something to keep on watch. Another name that I had to do watch is Blink. Why? Blink is a name that has been seeing bullish options activity, but has been able to go and make higher highs, higher lows. Pull back right now into the 21 day moving average. So this name, as you've been seeing on the pullbacks, has been holding the 21 day moving average. What I want to see going forward, if we are going to see a trend change or not. Okay, so are we going to bounce from the 21 day moving average? $47. We closed just at $47. We bounced from $47 on Friday. What is going to happen next week? Are we going to go back above 51 and above 51 going long into the $60 area, or are we going to break below 47 and below 47 watch out because we can go all the way into $38, $39? So bull case scenario, okay? Bull case scenario. 47 needs to hold. If 47 holds and if price goes above 51, we can go and push back into the 60s. That's the bull case. Bear case, break down below 47. Below 47, watch out, can go into 38, 39. That's the two scenarios that I'll be looking next week. Beyond Meat, one of the names that I had to the watch list, big pump and pop last week, faded a bit, and what I'll be looking, we have a gap to fill at 164.2. I have the bear case scenario at 177. Below 177, we can go into 167 and 164 to fill the gap, or if we hold 177, so that's the level that I'll be looking next week. If we hold 177 and reverse back up, watch out, we can go back into $190 area. So something that I'll be looking next week, these possible two scenarios, breaks and stays below 177, goes $10 lower to go into the 8-day moving average and fill the gap at 164, or if it holds 177, can go above $190 and $10 upside here going into $200 area. So one of the names to keep on watch. Dynamax, why I had to the watch list. First, big explosion last week. Boom, big explosion. Consolidation here, and on Friday it shows some relative strength. With the market falling apart, DVX actually held here some of the momentum. It has a big wall at 6.6, 6.8. What I'll be looking, if next week it's going to break or not the 66668 platform area and squeeze back into the $70 area. So something to keep on watch going into next week. Facebook fell apart after a big insane pop here on Thursday after earnings. It gave back and they have been fading since Thursday. Okay, so one of the things that ideas that I gave on Thursday, I gave idea for Friday last week, put 265 at 60 cents. So those put 265 gone all the way into $10. So from 60 cents all the way into $10. Insane. Okay, so congratulations to all the traders that got into that. So now what? Now we have 2 big days downside. Actually three. 1, 2, 3. It's wise on the way down to trim the profits on the shorts and looking for a possible reversal bounce. Not sure when and where this will stop. 254 is the level. We have 252. We have 245 here. What I'll be looking a possible reversal bounce next week. So something to keep open-minded. Can happen a reversal bounce. I'm not trying to catch the knife, but something to keep open-minded. If I was short, I would be looking to trim the profits on next couple of sessions. Harley Davidson, one of the names that I had to do watches. Why? Saw an unusual bearish imbalance going into next couple of sessions. We had a bearish reversal candle here on Thursday, some follow through on Friday, closed just above the 21-day moving average. If price goes below 39.5, that's my support. If it goes below 39.5, I'll be looking for a short, possible downside all the way into $35, $36 area. So something to keep open-minded. If Harley Davidson goes below 39 and stays below 39, can go all the way to 35. So something to keep on watch. Netflix, another name that saw some bearish action after earnings fading and almost filling the gap. What I'll be looking, bull case scenario needs above 541. That's Friday highs of the day. 541. I'll be looking for a big short squeeze up. Bear case scenario, if it's going finally to fill the gap, needs below 530. Below 530 we have $10 downside into the 50-day moving average, 520, and below 515 we go and fill the gap at 509. So something to keep on watch. We can go fill the gap, but if price goes below 541, we can have a big short squeeze. NIO, one of the names that keeps seeing pumping and pumping bullish options activity, actually didn't close that well on Friday. It made a lower high, reversal sell and lower high, but it's still holding the short term. It's a big fight here between bulls and bears. It's holding the 21-day moving average, $56. What we know, 55, 56 is a big level here for NIO. If it breaks below 55, I'll be looking for a short into the $50 area. That's another level, 50-day moving average and a big support also. So below 55, looking for $5 short into the $50. But if they are able to hold 56, 55, 56 and go above 59, I'll be looking for a bullish reversal and going back into the 60 to 64. So something to keep on watch. Let's see what the hell is going to happen. One of the stocks that I had to do also is NLS. Why? Relative strength last week, market falling apart, and we saw some relative strength. So above 25, looking for a possible move into the $30 area. So something to keep on watch. What we have more? Tesla that on Friday had a bear move case scenario here. We have a bear gap, something very similar as we saw on the SPYs and on the Cubes. Bear gap that didn't get filled after earnings. And on Friday, they closed price below the 21-day moving average. So 805, 21-day moving average is my first resistance. Second one, 838. Bull case scenario, only above 842, that's Friday highs of the day, above 842, looking to fill the gap at 858, but we need to see it. Otherwise, after the Friday close, what I'll be looking, below 780, we have a gap to fill at 740, and we can go all the way to 707, that's the 50-day moving average. So overall, the action pretty much bearish on the market. Let me show you some of the market breadth indicators, where we stand right now. New highs, new lows, still positive but fading. We can go and going for something like this as we saw in September, October, November, calling for a correction. And but once again, Fed is behind the wheel, so I'm not expecting a move like we saw on March. but staying open-minded at least for now. Okay. Another thing, the same indicator online, we didn't have yet a bear cross. A bear cross, what is something like this happened on March, and from there bad things happen. Right now, keeping the bull case here, still monitoring. The advanced decline issue is fading. Okay, lots of room for downside. We can go into the lower support of the Bollinger Band. We can have here a move all the way into 130k. Something to keep open-minded. The McLaren oscillator, it's down red. It's oversold. We can have a bounce to clear the oversold conditions, but staying open-minded for that going into next week. McLaren Summation Index, bear case scenario. We had a bear cross last week, fading here, printing the lower lows, lower highs, something like we saw on September. So staying open-minded for correction here. Looking for the charts, let's look into the major index. Looking for Dow Jones, it's fading, it's below the middle of the range, and we have here a bear gap, a bull gap here, a gap that needs to get filled, so we can go and fill the gap all the way into 28,400 on Dow Jones. Ugly weekly candle and fading on last week, closing below the 8 weekly candle here with a gap to fill, so we can go below 29k on the Dow. That's a possible scenario. Need to be open-minded for that. Nasdaq also fading and closed below the middle of the range, can go into the lower support of the Bollinger Band. Okay, so lots of room for downside if bulls not able to buy the dip and bears strike once again. Bearish reversal candle here on the weekly chart on Nasdaq, needs below 12,845 to go into the lower support of the weekly chart. So lots of room here. Small caps fading, also going below the middle of the range, can go into the lower support 198. It will fill the gap. That's one of the levels that we need to be and pay attention. So overall, we are fading. We are on a correction, but things not extremely. We are not on a bear market. Okay. On the short term, yes, we are below the 8 and 21 day moving average. That's one of the things. Corrections are normal. We had correction on September. As we are seeing here, okay, we had correction on September, we had corrections on at the end of October, November. It's possible we have another correction, but we need to be open-minded. That's a correction, and we reverse back up. And from there, we will evaluate what the hell is going to happen into the rest of the year, okay? So for now, short term, yes, bearish, but on the mid-long term, we keeping intact some of the bull case scenario. That can change, but we need to see it. What is the trading plan, in my opinion, going forward? I'm looking for possible some more fading, but we may have some cash to work. If we pull back and hit some of the levels, we can push some money to work. I'm mostly cash here. I can put from the cash 20% of the cash to work. If we pull back a little bit further, I can start adding SPY, small caps and the cubes. 20% of the cash, see if they are going to hold. If we going lower, I will wait to add the rest of the cash because we have lots of room. We can go all the way, for example, into 200-day moving average here on small caps, and look where we are. If we go into 200-day moving average, I'll be looking to put the rest of the money to work going into longer term frame. Okay, but that's the longer term. During the short term, I'll be looking to try to generate cash flow the best way I can. Okay, so thank you all for watching. Wish you all a great weekend. Stay safe